The first atomic bomb was dropped on Hiroshima.
Over humanity!
The fires of frustration and discord are burning in every
Let us
city.
not forget for a moment the toils and efforts that lie ahead.
They say that those who forget their history are condemned to repeat it. This is the History Lessons Podcast with certified financial planning practitioner Patrick Huey, author of History Lessons for the Modern Investor, and your guide to financial wisdom in the past, present, and future. You ready? Good. Let's get historical.
Can you imagine for a second being the studio executives when they greenlit the Michael Jackson biopic? Yeah, on paper it sounds easy. Global icon, giant catalog, wild visuals. But in reality, it's a little harder. You've got a messy, complicated story, a fan base with sky-high expectations, and a lot of people ready to declare it a masterpiece or a disaster based on a 2-minute trailer. That tension looks a lot like today's market. Lately, we've had a blowout month for retail spending, big earnings numbers coming in stronger than expected, and U.S. stocks back in positive territory with AI and tech leading the charge again. If you watched just that montage, you'd think everything was smooth sailing. But then you widen the frame and see the rest of the script. Higher prices at the pump, interest rate worries that refuse to go away, bond markets that are still limping along, and parts of the world that aren't benefiting as much from today's current storyline. The mistake is treating every good or bad scene like it's the whole movie. With money, that usually shows up as rushing into whatever sector is getting all the hype, or ignoring the boring parts of your portfolio that quietly hold the plot together, or assuming one hot theme, AI, tech, whatever, you name it, can carry every goal you have. But a healthier approach is always to think like a good director and not a fan on opening night. You need a full cast, growth assets for upside, steadier holdings for income and ballast, real diversification so one bad review doesn't sink the whole project. You don't rewrite your entire financial life because one quarter crushed expectations or because a single theme is back on top. So, if you want to be starting something, the goal isn't to chase every new hit single. You don't always need a thriller. And that would be, well, bad. The goal is to build a body of work, a plan that still holds up long after this cycle's soundtrack changes. In other words, don't stop till you get enough.
This episode is sponsored by Victory Independent Planning. At VIP, our mission is simple. Live well, do good. We build strong relationships with good people and help them turn money into what really matters. Retiring without worry, traveling more, supporting family, or funding the causes and projects they care about most. Based in Naples, Florida, and Portland, Oregon, we serve clients nationwide with comprehensive fiduciary advice, retirement income planning, custom investment portfolios, tax strategy, healthcare and Medicare decisions, and estate and legacy planning, all carefully organized around your unique goals. If you're ready for a plan that puts your best interests first, visit victoryindependentplanning.com and schedule your VIP consultation.
On April 26th, 1986, a meltdown at Chernobyl. This week we're talking about invisible risks, bad designs, and the cost of hiding the truth. In the early hours of April 26, 1986, at the Chernobyl nuclear power plant in Soviet Ukraine, engineers began a late-night safety test on reactor number 4. The goal was fairly mundane: see if the plant's turbines could keep generating enough power during a brief loss of external electricity to bridge the gap until backup generators started. But the setup was anything but routine. The reactor design had known some instabilities. Safety systems were disabled to get the test done, and operators were under pressure to follow orders despite their misgivings. Just after 1:23 a.m., a combination of design flaws and human error led to a runaway reaction. The reactor core exploded, blowing the roof off the building and releasing a massive plume of radioactive material into the night sky. Well, at first, local authorities tried to minimize the event. Residents of nearby Pripyat watched an eerie blue glow above the plant without any official explanation. It wasn't until radiation detectors at a Swedish nuclear facility started pinging that the wider world realized something was terribly wrong. Over the weeks and months that followed, hundreds of thousands of people were evacuated. A vast exclusion zone was created, and hastily assembled crews, many of them soldiers and firefighters with minimal protection, were sent in to contain the damage. The long-term health and environmental consequences are still being studied. But the political fallout was pretty clear. Chernobyl shattered what was left of public trust in Soviet competence and transparency and became a symbol of how dangerous hidden risks can be when combined with secrecy and institutional pride. For investors and retirees, Chernobyl is an extreme example of something we wrestle with all the time in a quieter, less dangerous way. Invisible risks, bad incentives, and the temptation to ignore or conceal problems until they become unmanageable. Most portfolios will never face anything as dramatic as a reactor explosion. But the underlying patterns, designs that look fine on paper but are fragile in practice, warning signs that will get brushed aside, and the high cost of waiting too long to act show up often in our financial lives. Here then are 4 lessons for the modern investor from Chernobyl's meltdown moment. One major lesson is about design risk. Chernobyl's reactor had a structural flaw that made it unstable under certain conditions, especially at low power. The operators didn't create that flaw. They inherited it. Many people inherit financial designs with similar weaknesses. Heavy concentration in one company's stock, an overbuilt real estate portfolio with too much leverage, or a retirement plan that depends on perpetually low interest rates. Those designs can hum along quietly for years until the wrong combination of conditions appear. Now, the solution is not to refuse all risk. It's to understand the architecture of what you own, test how it behaves under stress, and be willing to redesign before a bad night shift reveals that instability for you. Another lesson lies in the incentives and communication. At Chernobyl, managers pushed to complete a test on schedule, even when it meant violating procedures and turning off safety systems. Ugh. Subordinates didn't feel empowered to say no.
Нет.
So when the trouble started, early reports downplayed the scale of the problem. In personal finance, similar dynamics show up when advisors are paid more to sell certain products, when families avoid uncomfortable conversations about money, or when business partners gloss over liabilities just to make a deal happen. The risk isn't just that you make a bad investment, it's that you build an entire plan on information that has been filtered or sugar-coated. Demanding clear, conflict-free advice and insisting on seeing the full picture, even if it's awkward, that's the financial equivalent of keeping your safety systems turned on. Chernobyl also underscores the damage that comes from delaying an honest response. The Soviet government lost precious time trying to control the narrative rather than the radiation. Evacuations were delayed. International help was slow to be acknowledged. And by the time the world understood the scale of this accident, much of the harm was already baked in. For investors, there's a similar trap in hoping that a problem will simply go away if you don't look at it. A spending level that's obviously unsustainable, a tax issue that keeps getting kicked to next year, an aging parent or spouse with no legal documents in place. The longer you wait to acknowledge and address those issues, the fewer good options you tend to have. Small, early interventions, a budget review, a portfolio rebalance, a meeting with an estate attorney, believe me, they're far less painful than a crisis-driven overhaul. And finally, there's a stewardship lesson here. I mean, nuclear power, handled well, can generate large amounts of energy with relatively low emissions. And it's relatively safe. Look at the US Navy. Handled badly, it can render whole regions uninhabitable. Capital works much the same way. Concentrated in opaque structures, pushed to unsafe levels of risk, or used without regard to future consequences, it can do real damage to families, communities, and trust. But capital allocated thoughtfully, with transparency, with diversification, and with clear purposes, that can support generations. The difference comes down to culture. Do you treat money as something to be maximized at any cost, or as something you're responsible for managing wisely during your time with it? Here's my final thought this week. When people visit the Chernobyl exclusion zone today, they see abandoned buildings, overgrown streets, and the infamous sarcophagus encasing reactor number 4. It's a haunting reminder that some mistakes can't simply be grown out of or fixed with a quick patch. Your financial life won't leave behind a physical exclusion zone, at least I hope not. But choices you make now can either give your errors and causes more room to live and grow, or fence them in with avoidable problems. Planning, in that sense, is your chance to build a system that doesn't rely on everything always going right, and to make sure the risks you're taking are the ones you understand, can afford, and are willing to own in the light, not just on the night shift.